Washington is racing to regulate crypto. Wall Street is buying the dip, and XRP just extended a record that almost no other digital asset can claim. While most investors are focused on price action, some of the biggest developments in years are happening behind the scenes. The White House is pushing for regulatory clarity, major crypto firms are speaking with one voice, new digital asset legislation is moving through Congress, and institutions appear to be treating this market weakness as an opportunity. The question is simple. Are we witnessing the foundation being built for crypto's next major phase of growth? This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, where we break down the biggest stories shaping crypto, markets, and the future of digital assets. Today, we're covering a major push for the Clarity Act, coordinated by lobbying efforts from some of the largest companies in crypto, new digital asset tax legislation, growing institutional confidence despite market weakness, and why XRP's decade-long staying power deserves more attention than it's getting. Let's get into it. Let's start with what everyone sees. The market remains under pressure. Bitcoin has struggled to regain momentum. Ethereum continues trading below levels many investors expected, and XRP holders are once again asking the same question. Why isn't price reflecting all the positive developments happening across the industry? It's a reasonable question, because if you only looked at the charts, you might assume adoption was slowing down, but that's not what we're seeing. In fact, some of the most important developments in years are happening right now, and most of them have nothing to do with daily price action. One of the biggest developments came from the White House crypto advisor Patrick Witt. According to recent reports, administration officials believe this is a major week for the Clarity Act and that time is of the essence. That's a significant statement. For years, the crypto industry has been asking for one thing above all else: regulatory clarity. Not special treatment, not exemptions. Just clear rules that define how digital assets operate within the United States. And for the first time, it appears Washington may finally be moving toward delivering exactly that. The conversation is no longer whether crypto belongs in the financial system. The conversation is how it should be regulated. And that distinction matters. That doesn't mean the Clarity Act is guaranteed to pass without challenges. Reports indicate administration officials are scheduled to meet with law enforcement groups regarding concerns tied to portions of the legislation. Specifically, some officials believe certain provisions could make it harder to combat illicit finance. What's important here is the nature of the debate. A few years ago, many policymakers questioned whether crypto should exist at all. Today, the discussion centers on implementation details. That's a massive shift. When governments begin debating how to regulate an industry, rather than whether it should exist, it often signals that the broader battle has already been won. Now the focus turns toward building the framework. Perhaps the most important development came from the industry itself. Ripple, Coinbase, Kraken, Circle, Uniswap, Hedera, and dozens of other major organizations have joined together urging lawmakers to advance the Clarity Act. Think about how rare that is. Many of these companies compete directly against one another, yet they're unified on this issue. Why? Because regulatory clarity benefits the entire industry. Companies can build, investors gain confidence, institutions gain certainty, and innovation has a reason to stay within the United States. This coordinated effort sends a powerful message to Washington. The industry is ready for the next stage. The question is whether lawmakers are ready too. While the Clarity Act receives most of the attention, lawmakers are already working on additional digital asset legislation. The House Ways and Means Committee recently introduced several crypto-focused bills covering areas such as tax clarity for mining and staking, reduced tax paperwork for digital asset owners, charitable donations involving crypto, digital asset disclosure programs, application of existing anti-abuse tax rules. The significance isn't any single bill. It's the fact that these conversations are happening at all. This is what policymakers do when they're preparing for long-term integration, not when they're preparing for prohibition. Whether markets realize it yet or not, Washington appears increasingly focused on creating a lasting framework for digital assets. Now let's shift to Wall Street. According to Coinbase strategist John D'Agostino, institutions aren't panicking over Bitcoin's recent decline. In fact, many reportedly like Bitcoin even more at lower prices. That's worth paying attention to. Institutional investors often focus less on short-term volatility and more on long-term trends. They're evaluating regulation, infrastructure, custody solutions, liquidity, capital flows, and many of those areas continue improving despite weak market sentiment. While retail investors focus on today's price action, institutions appear focused on tomorrow's financial infrastructure. And historically, that's an important distinction. While most of the market remains focused on short-term price movement, XRP quietly added another remarkable accomplishment. XRP is being recognized as the only cryptocurrency besides Bitcoin to remain continuously within the top 10 digital assets by market cap since 2014. Think about everything that's happened since then. Multiple bull markets, multiple bear markets, thousands of projects launched, thousands disappeared. Entire narratives emerged and faded away, yet XRP remained. Whether you're bullish or bearish on XRP's future, maintaining that level of relevance for more than a decade is an achievement very few digital assets can claim. Longevity matters, especially in an industry where most projects fail to survive in a single cycle. When you connect all these developments together, a larger story begins to emerge. The market may look weak, prices may be frustrating, but beneath the surface, the foundations continue getting stronger. Lawmakers are building frameworks, the industry is coordinating efforts, institutions remain engaged, tax policies are being developed, and digital assets are becoming increasingly integrated into conversations about the future financial system. None of this guarantees immediate price appreciation, but major bull markets are often preceded by years of infrastructure development that most investors ignore. By the time the broader market recognizes what's happening, much of the groundwork has already been completed. That's why this period may prove far more important than many people realize. The headlines may be focused on price, but the smart money watches the infrastructure. And right now, the infrastructure continues moving forward. So what do you think? Will the Clarity Act finally deliver the regulatory certainty the industry has been waiting for? Are institutions right to remain confident during this market pullback? And does XRP's decade-long staying power deserve more attention than its current price action? Let me know in the comments below. If you enjoyed this episode, make sure to like, subscribe, and turn on notifications so you never miss an update. If you want to dive deeper, check out these videos here. Thanks for listening, and we'll see you in the next one.